What is going on, everybody? Welcome to Market Talks here on Cointelegraph. I am your host for the show. I'm Tim. I'm from the YouTube channel Coffee and Crypto, but I want to just welcome all of you guys to this show on Market Talk. This is the show we talk about everything you need to know about in the crypto space, and we interview analysts and experts to help you guide through this market. And I'm super honored to be joined today by Charlie Burton. And if you guys have never heard of Charlie Burton before, here's a little bit about who he is. So Charlie's a professional trader with 24 years of experience in the trading game. He's done it ever since 2001. He is the founder of Easy Trader and Charlie Burton Trading. He's also undefeated in the annual London Forex Show live trade-off for the last 5 years it was running. He has also been featured on the hugely popular BBC documentary, Trader: Millions by the Minute. Charlie is one of the very few trading educators who is also a professional money manager trading FCA-regulated capital. Let's go ahead and roll his clip. What's going on, Charlie? How are you doing today?
I'm good. Nice clip. I've never seen an intro like that. Thanks ever so much for that. As quite a surprise seeing that.
Yeah,
Quite happy with
I
that.
think it's funny because every single week the guests that come on, they look at that clip, they're like, "Oh my gosh, that was fantastic!" So
Yeah.
shout out to that graphic team and the whole production team over at Cointelegraph for always putting together some great stuff. But Charlie, I want to go ahead and jump in with you. As people might notice from the title of this video, we're looking at Bitcoin in some key levels, and one that we're going to keep an eye on is about 20,800. Now, I know in getting to talk with you a little bit before we went live today, your experience is a lot more trading in other fields like Forex and the stock market and whatnot, but you do talk about and you deal with Bitcoin and Ethereum a good amount. So I want to just start off by getting your overall take about what you think the crypto market looks like right now. And let's specifically talk about Bitcoin and potentially that $20,800 level.
Yeah. I mean, I was being interviewed back, oh, I don't know how many months ago it was now, when Bitcoin was up at 38,000, and we were talking about at that stage the potential for Bitcoin to come down to 20. To test those 2017 highs, and no one wanted to know about that at that stage, of course, and so you end up just getting a load of negative comments at that stage. But so we've got down there, and I think that it was a great level, a psychological level. Everyone was watching that zone there. We overshot it a little bit, but my personally, I we were talking just before coming on live, and I know we're probably going to discuss this, but I guess it depends. This level in Bitcoin really is going to be important in relation to what's going on in the stock market. If your belief is the stock market is going to go higher from here, then that's probably pretty good news for Bitcoin and the crypto asset class as a whole. So my view, though, is that I'm a little bit more cautious at the moment towards the stock market, and we can discuss that if you want to. And
Yeah.
so, therefore, I am a bit more cautious overall towards Bitcoin right now.
Yeah, that makes a whole lot of sense. And like you were talking about, yeah, that $20,000 level, that was what a lot of analysts were looking at. And as you said, we overshot it, but that happens. If you're looking at
Yeah,
like weekly charts and
yeah,
whatnot,
yeah.
wicks happen all
It's
the
nothing.
time.
Yeah.
But where we're currently sitting, so from your perspective, do you like to look at those stocks, the charts on the stock market, and then say, all right, well, we can utilize this for direction on the Bitcoin chart? Or do you spend a lot of time looking at the Bitcoin chart specifically when maybe counseling people on trade opportunities you might have over on Bitcoin?
I'm massively into correlations and intermarket analysis, and I think that any trader worth their salt should do that. I'm not a believer in blinkered trading, in just looking at a
Mm.
single market, whatever the market is, without looking at some of the other interrelationships. So whether you're trading Bitcoin and then My wife's calling me there. Whether you're trading Bitcoin, and she must be wanting to cook me dinner. I don't know. Oh no. Oh no, I'm the
Hey,
one
there
that
we
cooks
go.
the dinner.
That's
So yeah, or you're and therefore looking at what the stock markets are doing, or if you're trading the dollar and looking at what all these various different asset classes are doing in relation to the dollar. So um, for me, the seeing what's going on in the stock market, and by the byproduct of that is seeing what's going on in the bond market as well. It all triggers movement elsewhere, including in Bitcoin. So I wouldn't, for me, solely trade Bitcoin without taking a view across a couple of other asset classes, having a view on key levels in, for example, the stock market and elsewhere, like in bonds and what bond yields are doing as well. Interestingly, though, I must admit, I was desperately wanting Bitcoin to get up to 28,000, that 28 to 30,000 level, where it had come down and found some support before it broke down lower. So I wanted it to come back up and retest that, a bit like Ethereum had managed to do a great run back up to 2000. I just would have liked to have seen Bitcoin from a technical perspective just rally that little bit more, but we'll have to see. Maybe it's still going to go there, but yeah, that's how I tend to look at it. It's the stock market is all important
yeah, and I
until
think
those
that's really
correlations go, and at some
yeah.
point the correlations may actually disappear, and we do see that in asset classes, that they're highly correlated, and then all of a sudden the correlations go, and maybe that's coming at some point again in the future, but at the moment
Yeah.
um, we those correlations are fairly firmly entrenched.
Yeah, and we were talking about it before the show a little bit, but I think it's, interesting. You talk about you wanted to see Bitcoin get to that $28,000 level. We've talked about on this show before, and I talk about it over on my channel, the 28,000 to about 30,000. Again, a zone that used to be support during
Yeah.
the last drop we had before the one that came down to 17.6. But I want to hear your take on it, because we talked about volatility. I think a lot of people, after we kind of rejected right there at 25,000, are like, oh well, here we go. We have to go to set new low. And it's like, well, no, I mean, remember, this is crypto, home of the volatility. And
Yeah.
you were talking about this before the show, that volatility, as much as we love the volatility up, people don't seem to love the volatility down, and it has some circumstances that follow it. So what are your thoughts about that overall? And if you have years of experience in the stock market, to where you look at the volatility of Bitcoin alone, let alone going into the other cryptos, the volatility you see as a trader when you go from stocks to crypto is a very, very favorable thing to see, is it not?
Yeah, I mean, well, the thing with what we've seen with the likes of Bitcoin, yes, we have had a lot of volatility, and the market needed a clear out. We all know that. There was a lot of leverage money last year over here in the UK, even, which we're not as much of an adopter. There's certainly the youngsters are of
Yeah.
trading cryptos, but there's too many people who are uneducated in the market who are trading it in their 10-minute work breaks I went to see my car dealer, and he said, should I be investing into crypto assets, because he's the dealer principal at this BMW dealership, and he said that all my staff, they're all trading cryptos in their breaks and stuff. And then I've got other friends of mine who are saying, I've got people quitting their jobs because of, they think they're going to make loads of money, more money, and they had been trading cryptos, but I think they got a rude awakening there. One thing
Yeah.
that it's all very well when the markets are going up, but because of course, a rising tide lifts all ships, but it's when that tide goes back out again that people get caught, and it's no different to what was going on in the tech boom in the late 1990s. People were quitting their jobs to
Mm.
become day traders. That's when I started in the late 90s, and of course that then came home to roost as well. So I think with the market needed a bit of a clear out anyway. So yes, we had that volatility on the way down, and then it sort of dissipated to an extent. What we're seeing in Bitcoin is plenty of chop, aren't we? And I think it's just the market doing a job. And I always say that the market's there to try and put off as many traders as possible, traders and investors, and it's like a bucking bronco, and it's trying to shake them off, and it'll do it by two ways. We'll have these sharp bear markets, if you will, or pullbacks in
Hmm.
price, but also it can do it via boring people out of positions as well, or boring them out of the market. And I just think it's just the market's natural process of basically a flush. It's a flushing process that I see here. But with the sort of volatility we're talking about here, I think the volatility recently has come down. Although then you go and get a 10% up day or down day in these currencies. Sorry, in Bitcoin there, but it's quite difficult to catch for a lot of people. So they're not going to catch the absolute bottom. They're not going to catch everything unless you're a very
Yeah.
short-term trader. So in the main, there's probably still a lot of uncertainty out there as with regards to whether Bitcoin this is the bottom, so to speak, that we've just seen in the last couple of months, or whether there's another leg to go. So I think the market's doing a good job with people in creating that uncertainty.
Well, I think that's a great, a good transition point we could make right there. Because I'm going to ask, with what you're seeing in the stock market, and we talked about there's a lot of correlation, whether that correlation is coming to an end or whether it's going to continue. Crypto is kind of correlated to the stock market. Two questions I have, and you can answer this in whatever way you want to. What do you think was the catalyst for the stock market and therefore crypto to have a pretty aggressive bear market that we've had now over the last couple of months? And then also that question right there, whether we've hit the bottom or whatnot, what are you looking for in the stock market world? And if Bitcoin stays correlated to it in the crypto world, to know that we have in fact bottomed out and we have nothing but up to go from here?
Well, to answer your first question, and by the time I get to the second question, you'll have to repeat it because I'm getting to an age
Yeah,
I'll
that's
have
fine.
forgotten by then. So, but yeah, from a sentiment perspective, as you know well, there was a huge amount of euphoria in the markets, whether it's the stock market, property market, crypto assets as well. There was a huge amount of euphoria in the market, and it's always a concern to me, as same for yourself, when you see too many people getting too excited. And I'm sure you can see that in the comments that go on your channels. You'll see, you can sort of pick up on that sentiment even among the people who know what they're doing. And so I think that there was a lot of euphoria there anyway, but euphoria doesn't mean equal bear market. It's just a condition that is met, and we've seen that what with meme stocks as well, with the games, the people trading GameStop and all of that sort of stuff. And then we just saw that happen again in Bath and Beyond, for example, just last week, where these people are, piling in on these heavily shorted stocks. So the the backdrop was there from a sentiment perspective for huge euphoria. We've got, Dogecoin being created for a laugh, and then it goes up 15,000%. I mean, we're all going to be looking back in a few years' time, saying, "Oh my God, yeah, I can't believe that that all that stuff was going on." So I do think, from a sentiment perspective, we had the ingredients were there. From a macro perspective, of course, as we got into the beginning of this year, the S&P topped out in the first week of January, and so the market quite often follows a given narrative, and so it will stay on track with the narrative. Even there might be macro conditions that are starting to arise, and the market will ignore those until it chooses not to ignore them anymore. And the beast that was there was, of course, inflation, and these the path of rising interest rates. And so that was probably one of the bigger catalysts to start. And then, of course, it starts off with just a down week, doesn't it, in the stock market? And then all of a sudden, the press and the reporters start to talk about it, and then it becomes a bit more of a self-fulfilling prophecy. The stock markets were way overvalued, but just because markets are overvalued doesn't mean they have to go down. There has to be a catalyst, and we've seen that
Hmm.
building. We've been talking about inflation since, of course, last year anyway, but it just got to that crescendo, and now we're seeing the consequences, or have seen the consequences of that. So that's what's brought, I guess, that selling into the stock markets. The stock markets needed a flush out, and so that was I guess the catalyst for the move down that we've had in stocks. The big question is going to be whether that's it. I think in the short term, the markets swing in sentiment, don't they? They go from euphoria in the short term to pessimism in the short term. And certainly, as we
Mm,
bottomed in the S&P in June, July, July, we'd got to that sort of extreme of pessimism at that point, and so of course we can look back now and say, yeah, that was we were due about a good, healthy summer bounce. I guess the next question is, with the economic backdrop that's going on, is this really over? As you know full well, the S&P has just done a 23-24% bounce
right.
so far off the lows. But as Michael Burry put out recently, that was the average bear market rally in the 2000 to 2002 bear market. That was the average rally, was
Wow.
23%. So we don't know for certain as yet whether this stock market bounce we've had so far, is the beginning of a major new bull market, or is just a bounce. The one thing, or we can discuss, but there's just a lot going on around the world, and so at the moment, and I think with that backdrop at the moment, of course, the market is a forward discounting mechanism. However, we haven't even reached recessions in some of these countries, certainly here in Europe as yet, but that's coming. And so it's to quote the Game of Thrones, I guess we've got the winter is coming,
Mm.
and so I'm not a pessimist. I'm actually always pretty much I've been taught to be a cautious optimist in the markets, because there's always money to be made whatever way the markets are going. But do I see the potential for stocks to have another attempt at those lows? Yes, I do.
Yeah, and that's the kind of you're starting to get to the second part of the question. I know you said you wanted me to repeat it. It is we talked about what kind of called the top, and I loved your explanation there. Is that it was overextended, it was, but it needed some form of a spark, and that's where
Yeah,
inflation came in and really gave us the spark to come to the downside. So now we're talking here to somebody who really wants to get into trading. They want to do more trading, as you said. When you're talking, you're seeing people every single day wanting to quit their work, or they already quit their work, and they think they can make a full-time living in trading. What would you say to someone who has those aspirations, based off of all of the bear markets and the bottoms you've seen in your history? What are we looking for to know that the bottom finally is in? And I know that's a really hard and loaded question, but these are the questions that people with 20 years plus of experience get to answer.
well, I guess, I mean, if we quote one of the most famous investors, the most famous investor in the world, Warren Buffett, then he once famously said that when there's blood in the streets, then that's the time to buy. So I guess we then have to ask ourselves, do we think there's blood in the streets as yet? My view, it's not a guarantee that we have to have blood in the streets in order for the market to completely bottom. But I don't think that we've necessarily got to that point yet, because let's just take Bed Bath and Beyond and what just happened there just a week ago on its roller coaster ride, and this massive speculation that we are still seeing in the stock markets and elsewhere. And so coming back to that and crypto, um, I know that we've had a really good flush in crypto. But if my view, going back to market correlations, and the crypto world does stay correlated to the stock markets, so if the stock markets are going to come down, which is I'm leaning towards that until it proves otherwise, and we can discuss levels or whatever. But I still think from a macro perspective, there should be another flush in the stock markets. All of the time, Bitcoin, Ethereum stay mainly correlated to the stock markets. If that's what's going to happen there in the stock markets, then I would be cautious at the moment. So what would I be looking for? What you're looking for is, you want to speak to the average Joe in the street, and for him to be saying to you, I invested into cryptos once, and I made a lot of money and I lost it all. Don't go there. You want to hear people saying that sort of stuff to you, because when you're hearing lots of people saying, oh yeah, I did that and I lost money, that's probably a good time to start.
That's a great answer. That is a great answer. Yeah, and I think you're absolutely right. I think people want there to be blood in the streets, but I think I actually agree with you that it's almost like we got pricked and we don't like the feeling,
Yes.
but maybe there's a little more to go. And I was noticing because I don't have the years of experience you do in forex and stock market, but when I do my back analysis on Bitcoin specifically, because it is the oldest crypto, and being the crypto game, that's the one that the TA analyst, the analysts we really look at. And
Yeah.
I've noticed that a lot of times the bull markets finish with blow off tops. Now, we didn't have a blow off top here when we peaked in 2021. But when I'm looking at the other three major bear markets that we've had in the history of Bitcoin, they are not like V bottoms, or, they don't have a sharp decrease. They actually kind of bottom out and then move sideways and have another point where they come down to similar levels where the original pain was. And so with that analogy, I've kind of, talked with my channel. I told them, hey, I don't know if we're going to go lower. A lot of people are calling for like 11,000, 10,000. The
Okay.
people who really aren't Bitcoin, they don't really like Bitcoin. They're like, well, 3,000 again. My point is, I don't know if we have to go that low, but I think that
No.
we are going to be revisiting somewhere around that 17,000 because that's what we've seen in history. What are your thoughts about maybe comparing your history with traditional markets and Bitcoin? What are your thoughts about how bottoms of bear markets usually look?
Uh, Quite often, a bottom in a bear market will, as you quite rightly say, you'll make the price will make a low, and then it'll either make another marginal new low. So if the price has come down and made a low here, it will come back and do a retest. So it's that retest that we often see in bear markets. If you look at the 2000 to 2000 stock market crash, then if you look at the obviously the financial crisis as well, then usually there's a retest. Now that retest will either come down and make a marginal new low, and then you'll see, like in technical terms, you'll see a divergence with your traditional sort of indicators that people might use, like an RSI or an MACD or something like that. Um, or it'll actually make a marginal higher low, and then go higher. So, but we need to see that exhaustion point where more investors throw in the towel, because that's better for everybody else. So to be selfish in that regard, that you want those people, the weak hands as we call them, we want the weak hands out and the stronger hands to remain. So so for me, if the market doesn't necessarily have to go down and, as you've just said, go to 10,000, but we need to have the same mindset amongst the masses as if it has gone to 10,000. So if they say, oh no, here we go again, and Bitcoin's back down at, as you say, 17,000, and a lot of people say just throw in the towel, great. Or it bores them, as you said. Sometimes markets, especially in the, like you said, and we've seen it a lot in Bitcoin, it will have a move down and it just goes sideways for ages, and it'll put people off. It'll bore them out as well.
Right.
So I've been interviewed before, and the market was just going sideways, and lots of people just weren't interested, and yet it was gearing up. Fun enough, I think it was in about that April May time of 2020, and there wasn't a lot of interest at that point, and it was deemed to be a bit boring, Bitcoin. And then of course that was a great time in that sort of April May time to be getting in, because then we had that takeoff over the summer, then it consolidated again, then really kicked off in the autumn when lots of the big funds had announced that they were starting to invest. So as well, so yeah, we still need to see, from a sentiment perspective, not necessarily from a price perspective. Price doesn't have to go to 10,000, but from a sentiment perspective, it has to feel like that. And so that's what we need, that's what we want to see. So I agree with you. We've had a bit of a prick. I would want to see, a little bit more, and so where people throw in the towel a little bit more.
I like how you even put that there, that it's about the sentiment, it's about that feeling, because that's exactly what we saw. That timeline you were talking about when we dropped in April and May, based,
Yeah.
I think that when you're talking about the catalyst, we were overextended, we knew we needed to drop, and then Elon made his announcement and said,
Yeah.
hey guys, we have some environmental concerns about Bitcoin, so Tesla's going to be, not accepting Bitcoin anymore. We're going to sell some of it. Anyway, so the price dropped. And then there was that feeling. We dropped to about, $29,000 all the way from 64. And then we started moving sideways, getting boring. And I remember the sentiment in the market because we only made it back down to about 28, 7, something like that. I don't remember that. The bottom that we finally ended up using as a spring to rally was not that much lower than the original one, but there was that sentiment in the market. Here we go again. We're going down to 20,000. I'll come back when we hit 20,000 in price. And of course, now we've gotten down that far, but a lot of people thought it was happening back in the summer of 2021, and it took till the summer of 2022 to actually happen. So, this I didn't have this question planned, but I think I told you beforehand. I like to, after hearing you get to answer some questions, I'm like, man, I'm really curious about this. Something that I'm really big on, when I was really starting to learn the technical analysis and how to read the charts, I found a lot of the teachings of Wyckoff. And so I'm sure with your 20
Okay.
plus years of experience, you've done a lot. What are your thoughts
Yeah.
about the teachings of Wyckoff, the accumulation phase, the distribution phase? Do you have any thoughts about that happening right now in the stock market, in Bitcoin, or any of the other traditional markets?
Yeah, I mean it's part of TA, and so yes, you do get these those accumulation as you call it, and quite often within at the end of that accumulation phase there might actually be that final spike down, which and we see that a lot in markets, whether it's in traditional asset classes as in cryptos as well, and that marks the end of a move. So yeah, it's to me that I don't even like label it as a. I know what you're saying under Wyckoff theory there, and so you get that final markdown in price and then back up. But I just see that as I just read it as price action generally, where you're just having that final flush. And that's why I talk about markets boring people out of prices out of an asset class there. But in that regard, yes, it's good, solid price action really. In the market is doing its job. I think it's always there's two analogies I often use when it comes to markets. One is, as I've already said, the market is like a bucking bronco. It's trying to do its best to kick you off. If that is a bull market, it's going to do things like we've just said, that final spike down to take out anyone who started accumulating, because the retail, when you go through those accumulation phases, retail are going to start buying. But the problem is that if they're using stop losses, they're going to start putting their stops below that range there. And that's why so often at the end, you'll get that final flick down to take out all those stops, only for it to then go higher again. And so the market will do it that way. But the market also, I always liken it to having a little devil on your shoulder, and he's talking into your ear all the time. He's constantly nattering away, trying to goad you into doing the wrong thing. So what you've got to do as an investor or as a trader is think, well, okay, what are the masses out there thinking right now? And to me, that's part and parcel of what I'm doing all of the time. And we can pick up on that from going onto social media and all the channels that we have available to us to try and tap into that sentiment, because we've got a little devil on our shoulder saying, go on, in you go, in you go, in you go. This is so obviously going to go up. But if that's what we're feeling in our gut, do you not think that that's what everyone else is feeling as well? So quite often it's when our gut instinct is saying is fear, our natural fight or flight responses are kicking in. Um, so often that's the time when it is the right time to go in. So coming back to what you've just said about these consolidation phases, and then if you do get that final spike where you're thinking, oh no, I really don't want to be in this now, look at this move down, we'll keep watching, because if that reverses, then that could well be the right time, because when in the pit of your stomach you don't want to do it, very often they're the best trades.
And I love that so much, Charlie. And that's, I mean, what you were just talking about right there. That's what I found so fascinating about the way Wyckoff taught how to watch the markets, because everything you just described right there. He was like, watch for them to manipulate the right times. Like he talked about like news articles. Like he's like, you're gonna
Yeah,
find at the peaks, you're gonna find news articles posted that are really bullish, and it's gonna make a lot
yeah,
of the average retail investor say, "Oh, let me purchase." But then the ones that know what they're doing, the whales, the institutions, they're going to sell, and they make it boring because you just feel like you're selling every single bottom, you're buying every single top. You're like, "I'm done with this," and then they get that sentiment going down. And as you said earlier, it's like that sentiment of like, "Hey, maybe we didn't get all the way down to 20,000 during the summer of 2021, but it just felt like, man, we're a week away from hitting 20,000." And that's when they're able to jump on it, when what he calls the spring, that ends up kicking you back out of that entire channel you just spent months sitting in, if not years sitting in. I know this teaching is also for long time frame stuff. I
Mhm.
think it's just so cool. I love getting to find the history of that stuff, then talking with guys just like you who just watch that play out time after time after time in the stock market world.
Well,
That's fascinating.
it doesn't even matter what style of trader you are, what theory you use. There's a lot of Elliotitions. I don't know about certainly in crypto, in forex, but I'm sure probably in crypto as well. A lot of people like Elliott waves. I don't
Yes.
use Elliott waves either, but it's all the same. We're reading price action, whatever it is that we're looking at. What we're looking at when we stare at a chart, we're looking at mass human psychology, aren't we? So
Hmm.
if we can get away from saying, "Oh, that's a candlestick there, that's an engulfing candle," yes, that's all that stuff's important, of course, from a technical perspective, but we've got to see through it. It's a bit like the Matrix, and we've got to read through that and also be able to remember that what we're looking at when we're staring at a chart is human behavior. And if we can see through the candles, and which we need to see all those patterns, then we're then seeing mass human behavior. And there are times, not every day, but there are times, especially when the market's getting emotional, like you said, when we're getting closer towards those tops or closer towards lows, when we're getting extremes of emotions, then that does show up on the charts.
That's so good. I'm going to transition. I see two questions here, and these are good questions in the chat that I want to get your answer on. The first one I see here is from Inevitably LC. So shout out to Inevitably LC, saying, "How can we master cycles in the market?" So we've kind of been discussing that a little bit, but what is your advice to anyone out there trying to do at least part-time trading? Like maybe they're not quitting their job just yet, but they'd love to move towards full-time. How do they master reading the cycles that happen not only in the crypto space but in all the markets?
Oh God. Well, I'm not someone who follows cycles either, as such. I mean, I don't know what quite the context of what she means there, but certainly, if we just take someone let's take your typical person who's getting into trading. We'll call it, trading here. But they've got a full-time job and they're looking out. Maybe they've got a 5-year plan plus to get more heavily involved as they go forwards. Possibly one of the first things that, or certainly from a long-term perspective, I'm a big believer in dollar cost averaging anyway. If you believe in an asset class, so if you believe in the longer term future of Ethereum, a longer term future of Bitcoin, then the big assets there, then dollar cost averaging is a great long term investment tool anyway. So as Bitcoin comes down to 20,000, you're having a nibble into it, so you're accumulating some of it then, and then if it comes down to more, or even just on a time basis, you just say, right, once a month or once a quarter, I'm going to put another however much money you're willing to put into that asset class. So I'm a big believer in, for people who are looking over the longer term, that dollar cost averaging is one of the best investment techniques you can do, because it just mops up weakness in price and strength as well. So that would be the first thing that I would say. Um, Outside of that, to give someone advice, what I would do is, if they're looking at the charts, I would pick 3 time frames and just use those and try to combine 3 time frames. So a lot of the time I spend actually looking at like a monthly chart, a weekly time frame, and a daily. And so what we're looking for is it's an old expression, fade the short term trend in favor of the long term trend. I'll say it again. So we're looking to fade the short-term trend in favor of the long-term trend. So if I'm using 3 time frames, a monthly, weekly, and a daily. If the monthly trend is up, then and the daily trend is down, then I want to be looking for weakness on the daily trend in order to buy in favor of that overall longer term trend. And that's essentially, if you go and have a look at the charts of Bitcoin, if you look at the weekly and monthly charts, that's essentially where we're at right now. If you've got that longer term view, then you're fading this shorter term volatility and uh, uh, pullback in prices over this last year in favor of the longer term view. But from a
That's a
technical
great
perspective,
answer.
oh, crikey, you could then go into all sorts of proper technical strategies that I teach and stuff like that. But I can't do that in a
Right.
conversation. Yeah, it's way too technical.
That's very true. Very true. Two questions here from the same person. So I'm going to read them. I'm going to start with one of them. We'll get to the other one. I think this is alphaping or alphaping. I'm sorry. I'm probably butchering the name, but GmbH. Which type of sentiments drive the price the most? Because we have been talking about sentiments here. U.S. sentiment or global sentiments? Which do you think is overall bigger? Because it does at times, especially when I'm here in the United States. Sometimes it feels like we live in this bubble of like, man, whatever's happening in the U.S. government, whatever's happening, here in the stateside, that's what's affecting the whole space. And then we forget about, Europe is still a big mover, and China's a big mover, and there's lots of different places that have big impact on markets. But which would you say is the biggest sentiment to be keeping an eye on?
Yeah, there's many facets to this question or to the answer to this. Certainly, the US is still the largest economy globally, so it's still the driver of much of the global economy. So that's always, certainly in my time of being a trader, has always been the first thing to consider. So even for me over here in the UK, I spend a lot more time trading the US markets than the UK. It is the driver, and so if we are looking at sentiment, we can use that, and we could talk about what's going on at the moment in the US economy and versus other countries around the world as well. So it does lead. There's the old expression: if the US sneezes, the rest of the world catches a cold. So I do think that yes. An easy answer would be to say yes, look at the US first and then look around the world. But I think that the broader answer would be that we're all intrinsically linked anyway, a bit like trees' roots, and so they can communicate, has been proven via their root systems, and so we're so linked now, more so than ever, and even within the last 10, 12 years or so, with the acceleration of social media and access to information. When I went full-time trading in 2001, you just talked about newspaper articles or magazine covers. That was how I used to pick up on sentiment. Now we've got it at, it's on our phone, it's there right in front of us, going onto Twitter or wherever. So it is a different world now, and so the whole world moves that much faster and more in sync with one another as well. So because assets are flowing around the world so much faster than they probably ever have done. So yeah, that's my general view towards sentiment. That yes, I still look towards the US first and foremost, but whatever is going on there then tends to trickle everywhere else anyway.
That is really good. I like how you summed that one up for sure. So same person asked a different question, and I really like this question. This is one I've seen actually pretty often from a lot of different people. But anyway, they said I trade short time frames very successfully. So let's just stop right there. That's awesome. Good for
Yeah.
you. However, I feel I miss bigger swings with long-term frames. Should I try to trade bigger picture based on sentiments, or should I just stick to what I know? That's a good question. What is your thoughts on
It
that?
is. Yeah. It's I've always been a believer in playing to your strengths. And so
Mm.
if they're doing really well in the short term, the thing is, you almost can't have it all. So if you're really good at short term trading and then you want to switch to because you then see, oh, but I got into this move here and look how much further. Yes, I took my profit out, and I'm doing that frequently, but I'm missing out on these big moves that are going, for so much further. It looks simple on the charts when you with the benefit of hindsight, but it is a different mindset from a sentiment perspective. You need to have a lot of patience to then hold on to those trades, and to not want to bank the profit as price moves in your favor. So it's not it does require a different attitude towards that sort of trading. I mean, that's the sort of trading that I do more and more of, because I love the mental challenge. I don't get a mental challenge anymore of doing short-term trading. When I say short-term trading, I'm talking about being in and out within a couple of days, or even intraday trading. So I don't find that mentally challenging. So for me, trading is much greater than just trying to make money. It is a mental stimulus game for me as well. So I always use the story of I used to compete many years ago karate internationally. I used to fight over at different countries, and compete at international level at times. And but I was learning, or had learned, a martial art which has its roots 3,000 years into our history. So I used to love learning some of the older techniques that were up to thousands of years old. But the competition element of the martial arts is just that very shallow bit across the top. So I used to like it for the fun of it, but from a mental stimulus perspective, I like the depth of learning something which has been passed down from generation to generation. It has all that history behind it. So coming back to the market, it has to be deeper for me than literally sitting in front of my screens and trying to make money every week or every month or whatever. So therefore, I've found in my journey over this last 20 odd years is that holding on for the longer term trades, I get that mental stimulus, because you have got to hold on. You have got to sit through when you're in a trade. All of a sudden, a piece of economic news comes out which sends the market, back against your position, and you've got to sit through that and stay true to your trade. And so, and
Mm.
I love the whole mental challenge of that sort of stuff. So for him, I'd say at the moment, stay with what you're doing what you're doing really well at. If you want to go for that, don't make a big switch. Just do it on the side. One of the best things you could do is have two accounts. Have your account that you're trading all your short-term positions on, and have a separate account for trading, and just start slowly and small on the longer term stuff.
That was a very fascinating answer. That the longer time frame challenges your mind a little more. That's actually true. It builds patience.
Yeah.
It makes you actually have to do a lot of research. But here's one thing I will say, and what I've found, because I've done intraday trading, day trading where I'm in and out every couple of days, and then I do have a portfolio like we just mentioned. I try to get
Yeah.
close to bottoms, and I DCA at bottoms of markets, and then try to DCA out at the tops of them. However, what I also know, and anyone in chat, I don't know if you had days like this too. What I found when I was doing that intraday trading or day trading is sometimes the stress they can put on you to constantly be looking for a good spot to get out. There's times my brain would just wake me up in the middle of the night, and it's like I gotta go check the chart right now because I gotta see if I can get out of this position or find a good position to get in. And it wasn't even good for my long-term health. So it's almost like on one time frame, it challenges your brain more to go longer time frame, but you also can live a healthy, normal lifestyle because you got time to act. Versus the other one's a little easier, but it could really be a dinger on not only your physical but also mental health to be able to constantly be in those shorter time frames. But I loved your answer. Hey, stick with what you're good at for now, and as you get going, maybe expand how you're able to do that. Great answer. That's all we have time for today. This was a great
Oh,
interview, and I'm so glad that you came
we could
on
have gone
here,
for another
Charlie.
hour, I think.
I know this is really good stuff. We'll have you on again real soon. But for anyone who's wondering and watched this was like, man, I need to know more about Charlie. Where can they be following you? Where can they spend more time listening to you? What would you recommend and direct them towards?
You can go to my YouTube channel. So it's Charlie Burton Trading on YouTube. And so I'm putting out regular free content on my YouTube channel. So a lot of stuff on trader mindset, because that to me is more important than any of the technicals, really. You can have all the technicals in the world, but they won't do you that many favors if your mindset's not right for it. So I do a lot on that. I will talk about the markets, of course, on that channel as well. By all means, check out my website, charlieburtontrading.com. And I'm on Twitter at Charlie B Trader. So there's plenty of ways to check in and see what I'm up to.
Awesome. Well, thank you so much, Charlie, once again. That is all we have for you guys in this video. But if you loved this interview and you want more content just like this, the first thing you do, just smash that like button. It's really nice and easy. Subscribe to the channel for all this content and leave comments down below letting us know what you loved, what you want to see more of, so that we can continue to make this show phenomenal for all of you guys, because we want to see you succeed in the crypto space. That is all I have for you here on Market Talks, but I will see you guys next week. Peace.